Well, thank you guys for having me. And the first thing I'll say is please ask me as many questions as you can and want, because as Monty just mentioned, the mortgage marketplace has changed by the day. Uh, it's pretty crazy, and there's a lot going on right now. So I think the first thing I'll start off by saying is we've seen a major shift over the last week and a half. A lot more people looking to refinance their home, borrow more money to basically pay for their lives at this point. But there still are mortgages happening. The crazy thing that's really happened though is the Bank of Canada dropped the rates by 50 basis points about 3 weeks ago for the first time. And when that happened, rates dropped quite substantially, and it was a massive drop. People were flooding the market at that point. It did what it was supposed to do, which stimulated the economy. The problem was twofold. In parallel to that happening, all these banks introduced their work from home policies, and I would suggest you read Facebook comments on bank ads right now for mortgages. Every ad is, I've been on hold for 3 hours, I've been on hold for 2 hours,
Um,
you guys aren't doing anything, this is ridiculous. So as they all drop their rates, they realize we can't manage any of this deal flow. And to sort of, I guess, to slow down the marketplace at that time, two things happened. One, they decreased their spread on variable rate mortgages. And then two, they started to increase their fixed rates again, which slowed things down a bit. Then the Bank of Canada decreased the rates by another 50 basis points, which the goal of that was to decrease rates again. But the banks actually increased their rates even more after that and decreased their spreads even more. Um, so it's been a really volatile period. Rates have been going up and down. Customers who are rate shoppers have been heavily rate shopping because of that. Customers who bought a house over the last 2 months who need a mortgage are sort of left high and dry. Like we've had so many customers come to us and apply over the last 3 weeks. Like we've the last 3 weeks, not counting, let's call it the last couple days, have been three of the busiest weeks we've had from mortgage application perspective, because clients are sort of being scorned by their banks and either disappointed they've had to wait on the line for a while, only to hear maybe they're not the right mortgage lender for them, or maybe they can apply with a bank, or just in general they don't want to wait on hold. So it's been a busy couple weeks. It started to slow down for sure over the last 4 or 5 days. Um, but there's been an influx of people who've been looking to say, like, I have to get my mortgage closed. Another thing that we've actually seen, which we have never seen before, is just so you guys understand, part of the process on the mortgage is a client will get approved by the bank. So they get something called a commitment from the lender, roughly anywhere from 48 hours to 72 hours after we submit the application to the lender. And that's a normal period. That's not like now. It might take as much as 5 days. But when the lender sends their commitment, they then send conditions. And those conditions will say things like, we need proof of income, like your T4, your NOA, your pay stubs. So they'll usually ask for last 2 years of NOA, pay stubs, and last 2 months of, or last two pay stubs. But we've had clients who have been, so once that happens and they say everything is good, they say this is called broker complete. That means the client is ready to have everything sent to the lawyer, and that could happen literally a month and a half before the close date. What we've seen happen recently is even when clients are broker complete, a week or two before the mortgage is supposed to close, we'll have the lender reach out to us and say, we need the last two pay stubs. We need to see the last pay stub because we're worried that clients are losing their jobs right now, or they're being affected by COVID. We've seen a lot of companies had to decrease their salaries of their employees by 75%, 100%. I know a lot of companies that have had to put people on leave. Like, this is the nature of the industry right now. And we've seen that with a lot of our customers where they've lost salary, they've become unemployed, whatever it might be.
Yeah.
So the banks and lenders, and this isn't just big banks doing this. This is monoline lenders, this is credit unions who are doing a double check to ensure clients actually still are employed for when their mortgage closes. So those are really interesting things to be aware of. And that's why this is not to toot the horn of a mortgage broker or a company like ours that brokers mortgages. This is a time when I would suggest to your clients to say, go to a mortgage broker or someone who deals with A and B lenders, because there are going to be clients who are approved for a mortgage who will not get their mortgage because at the last minute their bank might turn the table on them. So being with a broker or someone to that effect who has other options, be it a B lender or even a private lender, is something to think about for them. Another thing to also say, though, is the private lender marketplace has changed overnight. The reason for that is private lenders were living the high life for the last 5 years, making 6 to 12%, making a 1 to 2% fee, easy money, bear market, no worries at all, really low levels of people missing mortgage payments, let alone having to overall default on their mortgage. A ton of private mortgage companies you're going to see over the next 4 months are going to fold. A lot of them are stopping to take clients in general right now because their lenders are not giving them money, or they're pulling money from them because they've lost money in the marketplace. So the private lender marketplace might start to dry up. And when that happens, the sharks come out and their rates are going to increase. Their speed is going to decrease. We have luckily seen some of our lenders, like a Haven Tree Bank or Home Trust, be a little bit more open to riskier clients during this time, because they are able to take more of a long-term view of the marketplace, where they say this coronavirus thing might be a 2-3 month thing. Even if someone's unemployed for a 6-month period to a year period, there's another 4 years for them to pay off their mortgage after that. So the private lender marketplace is drying up a bit, but the B mortgage side is being a little bit more lenient, because the overall legalities around mortgages are going to be loosened a bit during this time. I know Daphne and Mati, you guys have been speaking to Reuven Gorsht from Deeded. Every real estate lawyer that we've worked with is suddenly calling us and messaging us to say, hey guys, we could notarize things over video and we could do things digitally, because there's had to be a shift, because no one wants to risk someone's quote unquote life, but it's a bit much. But they don't want to risk getting someone potentially sick to sign mortgage documents. So that's been a shift that we've seen as well on both the legal side and on the lender side. So there's a ton more going on, but just off initially what I've said there, any initial questions that I can answer?
Yeah, I got a quick question. Hey Jesse, Jazz here. How you doing?
Hey Jazz, nice to see your face.
Yeah, thanks so much for doing this. We haven't formally met before, but yeah, no, it's question for you. It's so the mortgage insurance. Like, do you find lenders want clients to put less than 20% to get that insurance, so that I guess the mortgage insured in case of like job loss or stuff like that?
We haven't seen that specifically being said to us, hey, get your clients to put down less than 20%. Having said that, there's two things that have happened over the last few weeks. One, there's talk that the CMHC is going to actually insure refinanced mortgages. So this de-risks lenders, and insured lenders are actually refinancing mortgages. So on one end, yes, that is a sign that there is more of an interest in the insured mortgage side. The other side is uninsured mortgages, which are mortgages over $1 million, or for houses over $1 million. Their rates are always higher than for houses below $1 million or below 20%, but they've increased even more. So that is a potential consideration. It's more of an assumption based on seeing that happen and rates increase on that end. But to that end, mortgages below $1 million, houses below $1 million are still insured. The actual client doesn't pay for the insurance in that situation. Only if a mortgage is below 20%, below $1 million home, will the client pay for their insurance. So there's still a lot of homes being purchased that are insured, but the whole refinance side is an interesting development.
Now, if a client has been, like you mentioned, they've had that mortgage commitment, and a lot of them are asking, like you mentioned, to have that one paycheck before closing. They can technically pull out, right, just beforehand if something's up. Now, have you had that situation, and kind of how would you address that? Like, do you just try to find another lender, or kind of, tell them, hey, look at my track record, my clients have been pretty good?
You know what? We could be the top mortgage broker in the world and they won't do anything. Banks, the problem with banks is they're robotic. So if you don't fit underneath their umbrella, you don't fit under their umbrella. They're based on their actuaries telling them this is what we have to do. Obviously, there are times we could pull in some favors. We have certain lenders that we work with that are a little bit more malleable. And we have some lenders that have told us that if someone bought their house before March 31st, there's a little bit more leniency there. And that's with some of our bigger lenders like a TD or MCAP or potentially Scotiabank, although they've been a bit tight on some areas. So part of me says banks are going to be robotic. The other side of me says there are some things that we could do to say, let this pass through. The second part of your question, well, what do we do? So what do we do in those situations is we look to other lender options. So a B lender might be a little bit more open to lending to that person, like a Home Trust or ICICI Bank or Haven Tree Bank. We also have private lenders that we work with. We have a ton. We have a list of to recently just to see who's going to lend. So we do have those options as well, especially if it's a high quality buyer where there's a lot less perceived risk. The only problem with a private lender is your client's going to have at least 20% down, and that's at least. A lot of them want a 35% down payment, so that's why we're trying to fit them into the B equation. But it's a little bit of the Wild West right now, where we're trying to test and learn as we're going here. But it's to say there's 100% definitive answer is not always the case, because some clients are different. But I think the main answer I would say is we have other lenders, and we'll try till we die to make sure the client gets approved.
Yeah, like, I'll kind of give you a couple of scenarios with my clients. I had a client purchase a unit with 1 day condition, and this happened on Thursday. Friday was the deadline at 5 p.m. She got laid off at noon. So we pulled out from that deal. And the other one was a 5-day finance condition. On Friday, he got laid off. Monday was the actual 5th day. So in that situation, do you have a lender that says that you can present her and say, hey, listen, this guy or this lady has been working at this place for 5, 10, 15 years. She's been temporarily laid off because of COVID. Will they borrow to her or lend to her in that situation, or they'll be like, no job, too bad?
Yeah, it's a good question. So what I would say is, on one end, you have some lenders who will say maybe, and they'll say, let us look into it. It will never meet a 5-day conditional offer if that's the case, because when in the past, if something would be done in 48 to 72 hours, we're doubling timelines at the minimum. These banks are so inefficient, and they were so not prepared to be working from home. So things are moving slower on that end. So we have some lenders who might say maybe, but I wouldn't take that as anything other than a maybe, and more likely a no. What I also think is going to happen is banks are going to continually tighten, and they're going to continually say, we can't put ourselves in this risky situation, no matter if this person has an amazing job in the past or employed in the past. If they bought a house, especially if they bought a house after March. So if they're buying a house in April specifically, they're going to have a lot less leniency in that world. So I think that the moral of the story, I would say, is 5-day conditional offers are like at a minimum. I'm sure you've seen this. The buyer is going to have a little bit more power now than they've had 3 weeks ago. I still don't think Toronto buyers have that much power, because it's still a competitive marketplace even in these times.
Yeah.
But I would say more than ever, ensure that there's at least a 5-day conditional offer, just to at least get that this is not possible, or this is possible, or yes from a lender.
Yeah. I find 5 days isn't enough. I think now you guys are probably approaching 7 to 8 days for financing, because the one deal that a friend of mine did, they've asked extensions and they kept granting them because they just need more time. Because like you said, like, banks are just overwhelmed right now for refinancing and all that stuff, right? So
Totally. And that's one of the hardest part too, is if they're going to call a bank to get their mortgage, these are people, if they're employed, hopefully they're working from home, and to take 3 hours out of your day between 9 to 5 to call your bank to speak to them, that's a hefty proposition. So it's a bit of a crapshoot sometimes with this. So I would say, if you could do a 10-day conditional offer, do
great.
it. That would be the best bet.
Yeah, depending on the market, there are some pockets that there is just no multiple offer situation. You can do that, right? So, but do you negotiate refinancing, even if it's like within the 5 years? Let's say they have a 5 year, and after a year they're like, hey, let me refinance, even if I pay the penalty. Do you guys actually negotiate on behalf of the client?
Exactly, 100%. So the way our process works is we have 30 lenders that we work with, from the big banks to monoline lenders to credit unions. And just to explain the difference between those three types of lenders for the folks who don't know those, big banks, I would never suggest to anyone to go with a big bank. I don't think they provide a better product than any other lender. And the biggest problem that happens with big banks on mortgages is they often collateralize a mortgage, which means it's placed against the price of the house rather than the mortgage. So if you ever have to break your mortgage, your penalty is higher. The only time to go with a big bank is if their rates are lower. That's the only time I would suggest it to someone, which is often not the case. Like my mortgage, as an example, is with a credit union. So that's the other type of lender I'll explain. So a credit union, they have generally strong products, both on rate and features. Their fees are low if you ever have to, or lower often if you have to break your mortgage than you might with a big bank. The only downside to a credit union that generally could happen with someone is some of them are only exist on a province by province perspective. So if the lender is only in Ontario and your client is like at the 3-year mark says, we're moving to Nova Scotia, we want to port our mortgage over to Nova Scotia, that won't be possible. So that's a potential downside of a credit union. Then the last one is a monoline lender. So monoline lenders only do mortgages. These would be companies like MCAP, RMG, a few of those other types of lenders. And they offer highly competitive rates and products as well. And now when I say I wouldn't suggest a big bank, it doesn't mean that they're bad. It just means I would always suggest someone look at the other options, because often there are better solutions. And in the bank world, there also are some smaller banks that are still large, like an Equitable Bank, who provide good products. So that our opportunities from our perspective is, if it's a pre-approval, purchase, refinance, switch, we have a full view of all of the lenders that we work with. We're able to negotiate down rates by lowering our commission, or for certain lenders actually getting a rate exception to lower the rate even more than that. So that's one of the things that we always say is a benefit for our partner realtors as well as their clients, is you apply to one place, it's online, and we get a view of the marketplace to hopefully get you the best product available for purchase, pre-approval, and refinance. And to your point on refinance, there are people who are having to break their mortgage right now after 1 year.
Yeah.
And that could be a $20,000 to $25,000 fee. One of the nice things about refinancing is that you could borrow that fee. So let's say your house went up in value by 20% over a year span. You could borrow that up to 80% of the value of your house more. So let's say hopefully you could borrow another $70,000. If your fee is $20,000, you borrow that $20,000, that $70,000, $20,000 of that covers the fee. You still have an extra $50,000 in it. So you are going to have to pay interest over time. It is going to be expensive, but it's a long-term payment or a short-term solution.
Do you have any lenders that would actually help you with that penalty? Hey, I'll pay half the penalty if you come with me, right? Do they do that?
No.
No, not at all.
No. It's like, that's the holy grail that we always hope some lenders are going to say. Like we had someone sign up a couple weeks ago with a $2.4 million refinance, and he reached out to his bank, and the bank said the fee to break the mortgage was $40,000. And we said to TD, guys, this is a great white buffalo. Like, we got to get this. Like, cover $10,000 of the fee. We'll cover another half of that, $10,000 of the fee. So his fee's only $20,000. And they said no.
Really? Wow. Okay.
Yeah, it's crazy. It's nuts. It makes no sense.
Yeah.
But I don't know why they don't do it. There are some lenders that will cover your legal fees. So if there's $1,000 legal fee, they'll cover that and some disbursements. But yeah, it's not exactly something they're willing to do.
Yeah. Awesome. Perfect. Well, thanks so much. I don't know if anyone else out there have questions. I don't know. Is there more people out here?
Yeah, we're all here. Does anyone else have any other questions for Jesse? Just unmute your mic if it's muted. Give it a few seconds.
By the way, I never wear a fedora. We all can't have nice hair like Jesse, so I gotta cover it
He's
up,
prepared for
right?
this one.
To be fair, you have no
I was
idea.
wondering why you have wearing a hat in the house, Jeff.
Bad hair day. I haven't had a haircut in so long.
I'm running a 3-month mark of no haircut, and I'm growing my my playoff beard right now, the quarantine playoff beard. So I'm kind of worried what I'm going to look like in 2 months from now when we get back to reality, hopefully.
Yeah.
All right, Jesse, are there any final tips that you can give us that we can pass on to our potential buyer clients, people looking for homes right now?
Yeah, the final tips I would say is get pre-approved. That's the first thing I would say to every single one of your clients. What pre-approval will do for them during this time is let them know what their max affordability is. Let them know that the banks will probably lend to them. Give them an idea of what the rates are so they can understand what price they were going to pay on a month-to-month basis. Because now if they are looking to buy, anyone who's looking to buy in the next 2 months is going to be hopefully a much more educated buyer who sees that this is an opportunity to maybe get into the marketplace when there's not going to be as much competition. I've heard from a ton of my friends, and this is like the token millennial who has been wanting to get into the marketplace for a while, who are like, maybe this is the time to do it. And these are the people who might have been sitting on the sidelines. A lot of people don't understand what they could afford. They have no idea. They just think, oh, my household income's 150K. I can afford X amount of house. They don't know that debt contributes into what they can afford. They don't know that their credit score can. So that's something I would highly suggest to all of you is make sure your clients get pre-approved, understand what they can afford, so that if they are going to start to make offers, they know what their max affordability is. On the HomeWise side of things, we do have our realtor referral program. I could send the email back to Mark so he could resend that to you guys just to Mati and Daphne as well, so they could just share it with your team so they can understand how we could see who your clients are, so we could keep you guys posted on the progress of your clients and how that all works, so you're aware of that.
Okay.
We also have calculators on our site as well that are really high level to help with mortgage affordability, as well as closing costs and everything to that effect. So those are some tools that we have at our disposal that you can help your clients with. So that's one piece of advice, is definitely get pre-approved. What we have seen though over the last few weeks is pre-approvals the banks are not saying that they're not, it's not that they're not valid, it's that they're not saying, okay, we're going to keep that pre-approval and yeah, that works. They're going to say, okay, now you have to get fully underwritten after you get your mortgage. So make sure your clients know that a pre-approval is worth as much as it is as a piece of paper. It is an important thing to get, but it doesn't mean you have a mortgage. So still get the financing clause in there, because there are people who get pre-approved who might have lost their job or might have lied on their pre-approval, because people lie. It's an unfortunate thing. And people make accidents when they lie and they say, oh yeah, my salary was $70,000 when their salary was actually $65,000. And then extra $5,000 can change things.
Right.
Or they might not realize that they had a specific debt. Like they might not realize that their car lease is a debt, and they realize that when they actually go into the full approval. So just making sure your clients are as prepared as possible. And again, because we are a digital company and they can apply online with us, we could be super efficient with them, and they don't have to worry about waiting on hold with banks. They could only work with us, and we could give them an idea of what they'll probably be approved for without having to actually get them pre-approved yet. So the pre-approval could take a couple days to get back, but one of the advisors on our team could give them an idea of what their affordability is and what other things they should consider would be.
Okay. And during these times, what's the best way to look at a hold of it?
Range of the people that are mostly like finding the opportunity now to buy a house? What would you say?
Sorry, I missed the start of that. What's the age you're saying?
The age range that you are seeing mostly. Is there something specific, or it's all across the board?
It's all across the board. I would say a lot of people born in the 80s right now have been applying, more than almost ever. Generally, our average consumer is 35 years old. That's the average age of them. So that is our average. But we've seen a lot more people with 1980s as their age range apply. I was actually, just before this call, I was on a call with there's a South African group that I'm part of, and one of them is a realtor that's part of the group, and we're under the same impression that there's going to be a Pandora's box thing happen, that once the marketplace reopens, that there's going to be a lot of people re-entering the marketplace. So this next 2 months is going to be people who have liquidity, and people who have steady, stable jobs, because I'm sure you guys notice this from working at home right now. You're spending a lot less money on going out to eat, on things that you might not need as much right now. So the people that we're seeing right now, like the incomes that we see from people signing up right now are higher than we've ever had for people signing up. So that's something to be aware of as well.
Let's see. So what is the interest rate right now compared to before the crisis began? Like the average, it's different, but
it's a little bit higher, not too much higher. So before the crisis started, a high ratio mortgage, this is a mortgage under $1 million, less than 20% down. That mortgage rate was anywhere between, let's call it 2.49 and 2.79. Now it's more like 2.59 to 2.89. For a less than $1 million mortgage, 20% down, it's more like 2.69 to 2.89. And then uninsurable mortgage, which is over $1 million, we're seeing 3.1 to 3.3. So there's a range. Those rates can sometimes get lower depending on how we're able to get it down with the lender. But that rate,
it's a little bit higher. By the way, did you start working in the States? Do you know what's going on in the States, or you're not there yet?
In the States, it's heavy refinance world right now. So no one, as an example, in the States, Sotheby's has seen the new sales drop to 99%. Companies like the Redfin, I think the Redfin and some of those other companies have stopped any new sales during this time.
Yeah.
So the U.S. has been massively hit by this. This is going to happen in Toronto and in Ontario and Canada over the coming weeks, from what we're seeing from U.S. trends.
We're expecting that. We're definitely expecting that.
Yeah. So
I'm still amazed that there are people in the market right now, but
I think it's the opportunists and the people in need, the people who sold their house, who thought they were going to buy a house, and the opportunists. And this is what I'm hearing from conversations as well as seeing online, but not 100%. Like I think there's a whole different group of people.
Okay.
All right, guys, I appreciate your time. Jesse, what's the best way to get a hold of you if people have additional questions after this?
I'll send you my contact information, Mark. So you have that. So please share my email, phone number out with everyone. I'm always available for a text, call, email, whatever. But honestly, the best way to do it is, if your clients are interested in applying, have them apply directly through our site. It literally takes 5 minutes. It's really, really easy. We'll know that you sent them to us. So I could talk to Mark about getting you guys all set up with your own individual referral URLs so that your clients will know it's Justo Jazz. And I hope that's your nickname too, Jazz. But they'll know it's a Justo client, specifically Jazz, so we'll be able to keep you abreast of the situation, so you know exactly what's going on with your client. But that's the best thing. Like, if your client needs a mortgage, don't say, hey, Jesse, here's this client, get them applied. Literally send them a URL saying, hey, we've partnered with HomeWise. You can apply directly online. They have 30 different lenders. You can see all the lenders right on our website too, from an A and B perspective. We don't post our privates there. If a client really does want to speak to a human, that is totally fine. Connect them with me and I can connect them to one of our advisors. But our suggestion is always apply online, because we get so much information on the client that's really useful, so that rather than having to talk to them on the phone for a half hour to get that information, they do it in 5 minutes, and then we talk to them from a place of knowledge, and rather than asking annoying questions, we're able to provide them advice.
All right, sounds good, Jesse.
2 quick questions. Sorry, really, really fast. Number one, do you guys do mortgage commitments? I know you guys are going to pay for them, but do you do them? And 2, do you have a lender that would do rental? Because I have a lot of investors that would consider rent more than 50% as income.
More than 50%? No, I don't think there's any lenders who do that. So rental income for all of them is usually 50%. I can look into it. Desjardins our best lender when it comes to rentals, and they might have some leniency there.
Okay.
So that's a potential one. Remind me the first question there. Sorry.
Mortgage commitment. So we do a lot of pre-constructions, and they always want a mortgage commitment. I know you guys won't get paid for that.
We're fine with that.
Okay.
We do pre-approvals. We don't do HomeWise mortgage commitments because most developers aren't accepting broker commitments anymore.
Mm-hmm.
But we'll do pre-approvals with lenders, so we're happy to do that. We
Okay.
A lot of brokers don't do that. We're happy to do it because it gets a customer into our purchase funnel. So
Perfect.
if you have customers who need pre-approval for that, send them our way. Happy to do it.
Perfect. Awesome.
All right, Jesse, thanks again for your time. Anyone else, if you have any questions, feel free to follow up with Jesse afterwards. We'll talk to you very soon, Jesse. Thanks again.
Okay. Thanks, guys. Be well.
Thanks, man.
See you.
Cheers.
Station.
Yeah,
Thanks.
bye-bye.
Yeah.